It's 12 o'clock. Welcome to Taking Stock. I'm joined by John here. It's the 26th, Tuesday, September 2023. Lots of news out, John.
Oh, astonishing amounts of news.
Yeah, we've got comments already. In fact, Phil says Asos trading update. Yeah, we'll look at that. Showing weak revenue growth, he says, but profit savings seem to be progressing, not showing strength like JD Sports. No, I don't think it is JD Sports, is it? Also, Card Factory, someone else. Who's this? Matthew. Market is irrational, which I love. Was 80% up, an average up at 105 and 102. Steel at these prices. Happy to build with confidence. Okay, we'll look at those. I also want to say, right, there's a lot of companies falling today. In fact, let's share a screen here on... In fact, let's look at the top indices first of all. It's all a little bit down. The FTSE 100 is trying to nudge into the green by 0.02%. Barclays is a riser. Ocado, your favorite stock, John, is the second biggest riser. What are the fallers here? Sainsbury's, pouring. Barclays, Whitbread, all falling down there.
Let's go to Sainsbury's.
Well, I don't know.
News from there this morning?
Yeah, down 0.5%. But if cash is king, John, here's a question for you. What is queen then? If cash is king, what is queen? Now, I say this because I want to go straight to the losers board. And cash is king. The biggest fallers today pretty much all have cash problems. In fact, they don't. Anglo-Asian, but Bowleven do. I mean, if you look in there, it's funny how companies take a while to get to it. It's about the sale going on. It's not really happening. And they have corporate financing. And they do say they need to raise money, but it's hard. It's hard work. We know that. Extended delay in closing that transaction hasn't helped. That's Bowleven down 50%. And who else was it?
MGC Pharma.
MGC Pharma.
Brutal update.
A letter from the managing director. Oh my! Did you send a letter? Do you think, or did you just email it? Or did you send the letters?
It's. I've not seen one like this before, I have to say, but I admire the company's openness and the way they've communicated what is tough. We saw, them approaching this financing wall. Yeah. It's a shame because I think they're working on some really innovative plant-based medicines that address some really important unmet medical needs, particularly around mental health, and it just shows how tough it is out there.
Yeah, well, this
they really made some good progress on the commercial front and in the lab. So it's just tough out there.
They are forced to take decisive action and design a restructuring plan to secure long-term financing and provide the company with a necessary runway required to achieve key inflection milestones. The plan will reduce our reliance on constant capital raising and allow us to complete an 18-month work plan. What does that mean?
Take private.
Do? Yeah, take the private. Is that what they're saying? Okay.
That sounds like it.
All right. So that's so cash is king. Comment below if you want. What is queen? If cash is king, because let's be honest, if you haven't got cash, if you're a loss-making company and you haven't got cash, that's it. Pretty much, you need cash. I'm suggesting what queen is growth, because one feeds into the other. You do need cash to grow, and when you're growing. Not only can you generate cash if you're loss-making anyway, if you are growing, it's easy to raise cash.
But growing
if you're not growing some way.
But growing what exactly? I mean, that's the question.
Yeah, exactly. You can
grow. Yeah, exactly. You can grow your sales. Ad infinitum. But if you grow them unprofitably, then they're not worth a penny.
I mean, growth. I mean, I'm also assuming decent margins. Is obviously trying to simplify it a bit, but I mean, as long as you've got decent margins, it'll drop through in the end, But that's it. U Group as well, half year result phenomenal. Jerome says that. Supreme is smashing it. Vapes risk oversold recently, similar to Facilities ADF. Drop opportunity. A few months ago.
Opportunity, I like that.
Yeah, Pete, a friend of mine on the web, on weekend web, weekend webinar, I used to do Pete. I'm still going to do it, can't catch up, but he did coin that term, a drop opportunity, which I like it. Quite good. Yeah. So let's go through some of these. We've got Cleantech Lithium. I spoke to Aldo Boitano. He's an Italian in Chile. And this is a second sort of project now. We've done a scoping study on, and this is direct lithium extraction, of course. And those two projects they now have show an MPV of around $3 billion and an internal rate of return around about 43% each. So it's good. Look at it, good projects. And of course, lithium is always going to be needed going forward, isn't it?
Yeah, they're great projects. Not just because of their value, but obviously that's what we as investors are interested in, but because of the way they're doing it. This direct lithium extraction.
Yeah,
is the environmentally friendly, and that's powered, of course, by renewable energy. In their case, they're targeting 100%. So yeah, it sort of ticks a lot of boxes for certain markets, particularly EU markets, where there's increasing awareness of the potential environmental impact of this stuff. So yeah, ticking the ESG box is very, very important, and Cleantech have got that.
I was looking at this company a while back. I was doing research on companies around, transforming the cancer sort of sector if they possibly can. And I was looking at Oxford Biodynamics, and I thought, oh, they need some cash. And then they raised some money a few months back, and I thought they're still burning quite a bit of cash. But they've come out with this news. They are the biggest risers today, and this is they launched a 94% accurate PSE test. Now, men of a certain age, it's essential you get checked, and I'm
nearly there, man. I'm nearly there.
Well, I'm there, and I go to the doctor as often as I can for him to insert something into me. But you got to have a hobby. You got to have a hobby.
Cheap thrills stuff.
Yeah, it's just, but no, this is very, because I don't know if you PSA tests for prostate cancer, they're not that accurate. But they're saying now this EpiSwitch prostate screening thing boosts it from 55 to 94% to determine the presence or absence of prostate cancer. That is a game changer.
Yeah, very much so.
If that's true, that is a game changer. And like I said, that's probably why they're up 100% today. I mean, they have been in an awful downtrend. Look at that. That's phenomenal. It's gone from 220 in 2018 to 21 pence. That's 90%. And even now, that's 90% value destruction. But they did raise money. So very interesting. I mean, when you see that, have I missed the boat? I think it may come back. Who knows?
Yeah. Well, I mean, what I don't understand is then, what comes next. So what's the path? So great, amazing news. They've got the test that, delivers this incredible step change in the way this horrible cancer is diagnosed, often caught very late as well, mainly because men don't like to go to the doctors very often to have things inserted into them. And so yeah, it is a potential game changer. Anything non-invasive diagnostics, that is we're hearing this more and more of this. There's another company that does it for lung tests. Is it LungLife that does that one? I can't remember.
LungLife, yes, LungLife. I own a couple of shares in those. Yes,
yeah. So non-invasive diagnostics, great stuff.
In fact, they come out with they should come out with a big study, results for a big study. They said this month actually, and we're getting towards the end of September, so that's overdue. But again, they transform, testing the and just even the cost of it as well. So that's lung cancer. They're saying here, the PSC test will be immediately available to men in the UK using the US testing process result. What? Okay.
Yeah, so I want to see some numbers. So that what I don't understand right at this minute is how do we get from a successful test, which obviously there's some infrastructure there to do the processing in the US, to actually this being rolled out on a massive scale.
Yeah,
which it would need to be. But I assume they've got a plan. I just need to go away and have a look at what it is. But if there is a plan, and I'm sure there is, then as you say, this is game changing, and they can really start to recover from some of those, that very long share price deflation that they've seen.
Yeah,
97% up could be just the beginning.
Well, look at that. And Synthoma, you're probably thinking, whoa! I'm assuming that's a share consolidation there. So it's consolidated shares. Card Factory, we've been asked to look at. Did you see? I mean, they are one of the most read. So, what's? Did you have a look through this, John?
I did have a quick look through.
It seems quite cheap, doesn't it? Really? I mean,
I mean, the valuation is really cheap. So the 8. What are we talking about? 8 and a bit times 24 earnings.
Yeah. So if you do profit before tax, it's 25. In fact, what's the profit after tax? It's about 20, I think it was 20 after tax. And so if you double that, just because it's half year, you get 40 million, and their market cap is what is
349.
149. So there we are. That's 8 times, pretty much. But my only concern with Card Factor, I mean, they've rallied strongly, quickly, but how do they continue to this growth? How they keep, I don't know the story. I do apologize. But if you look at that on the chart, there is some resistance here. And you often get that, a run up, to results. And then, like I said, results can be a liquidity event where people cash in. And so that can happen. So
I suspect there might be a little bit of that in this.
Yeah. And look at that. In fact, if you look at this nice support there, around about £1 anyway. Nice fried figure, and say previous resistance here at £1. So don't get impatient if it didn't rise on results. That often happens, on results. You get liquidity events, people selling. So it may take a breather, go sideways for a while.
Yeah.
But
generally speaking, most retail stores, when they get, it's a rollout story. So more shops or doing more with the shops that they have. Online growth. I mean, this is, interesting. Online like-for-like sales were down here. Probably partly because people are going back into stores. Partnerships they talk about, and they've got a partnership in the Middle East with Liwa Trading Enterprises. So international expansion, which has never been a happy hunting ground for UK retailers. It has to be said. JD, going back to them, they're one of the few that I can remember that has really made an enormous success of expanding outside the UK. But that's what comes next, and I don't know what the sort of market capacity is for card shops. But as we spoke about before, you do have other card retailers that have been retrenching, like Clinton's, which is
okay. So they can snap up their share,
taking share, exactly. Share.
I'm not over the story, but I don't know what. I'm not. They're probably pictured the wrong guy here, but I'm not a huge card factory visitor. I don't think I've ever been. No, I've been in one probably. Been one in the last 30 years.
Yeah, I'm not.
But I'm not their target market. Let's look at Asos. Of course, once the darling of AIM. I always remember that quote saying, if you invested £1,000 in Asos when it listed, you'd have £161,000 at the high. Now they come up here, everything's in brackets pretty much on this trading update.
Yeah, I don't think I've ever seen a statement where absolutely everything is in brackets on the box.
I thought so. And they do say, their improvements or they're burning less pretty much, but so it's growth. They do say the companies continue to execute on its driving change agenda. Well, that's good as long as they're driving change, but what's happening to the bottom line, So you can see from the results, they're down 1.6. That's not a bad thing or a big result, but they've been hammered, haven't they,
They have, there's all sorts of things that have gone wrong in this market. But a lot of it, you've got to say it's down to poor execution. Have
they had it online, independent sort of online sort of retailers like this, like Boohoo and Astos, they've had their day. They're not going to revisit those highs again. There's too much competition now, isn't it? Like I said, when these first started out, these companies, they were the only online offering. And now you got every single high street have their own online offering. So are they ever going to get back up there? I mean, from those figures, it doesn't look like it's a sterling. Again, it's a lot. There's a combination of problems as well, isn't it? With costs and all that stuff. H&M. Well,
they're taking a lot of cost out of the business by the looks of things, and as the listener alluded to, and as they say in the statement, the focus now, sales are going backwards, but actually the laser-like focus on cost means that they're actually profitable, I think, in the quarter. And improving cash flow. I mean, it's again, it's an operational story that's behind the scenes here. So you just got to wait to see what they can do. But you get the impression that the future of this business is a seriously smaller one than it was before. At the top line, they talk about sort of pulling out of sort of what have been unprofitable lines of business, which is very sensible. Goes back to that point we were making earlier about buying in growth. If your sales are not generating profits, then what's the point of having them?
EQTEQ is one of the most read. Of course, they've got some successful completion of feasibility work at the biogas Jourdan in France. And so that's they're going to be paid bill for 250 grand for the energy, front engineering services there. For it's a very hot area, but seem to go well. Card factor there, quantum blockchain, eEnergy is won a contract with was it 1.9 million supplying solar panels there, and in fact, Sean does say surely Moonpig will be eating Card Factory's online share.
Well, you would have thought it had been doing that already. Moonpig has been around for a while. I haven't looked at Moonpig's numbers for.
Well, it's recovered for quite nicely. I mean, the chart, look at that. I mean, you can see here, I quite like the 50-day moving average crossing that, then breaking new highs. It broke new highs here, broke 200-day moving average. And so it's off the lows from, sort of a quid to 160. They do a little bit of debt there, I think. Moonpig. But so Oxford by PCIP. Essentially, they want a victory in the High Court.
Patent dispute.
patent is it? I don't know much about what they do. They're the global cloud provider.
It's payments. It's part of sort of telecoms payment infrastructure.
Okay,
I've never looked at it in great detail, but yeah, it's got this sort of patent stuff has been hanging over it. So, always good when you win a big patent case.
Yeah, quantum blockchain. Now, I've spoken to the main man, Francois Gadin, there quite a few times, and he is like a typical almost professor, but in the Bitcoin mining area. It's quite exciting because they reckon their algorithms can improve Bitcoin mining. What's Victor saying? By
yeah, about 2.5 times near enough.
Yeah. So, but it's like I say, it's pre-revenue, and so it's early stage. But and it's also it's pretty much it's like a commodity play, isn't it? It is, of course, linked to the price of Bitcoin, because if the value of Bitcoin is going down, then I assume this will go down as well. But Bitcoin, like I said, it could be it's bouncing off that $25,000 level. I mean, look at that chart. You can see there quite evidently there's a nice support resistance line at 25,000. And it's bounced off it recently twice, 3 times. So my thought is this: when crypto starts rallying, the wider markets will, because it's about risk, and it's a more risky play. So when that starts rallying, you will see people then are prepared to take more risk. And it has been before people said get some Bitcoin because it's insulated from the wider market. No, it's not. I mean, if you look at that, it's like 80% down in the last 2-3 years. So it's not insulated from the wider market. But yeah, quantum blockchain, I think is a play on that. But it's quite exciting there. What's LifeSafe? John,
fire safety, fire extinguishers. They're developing, or they have developed fire safety, fire suppression technology that can handle lithium battery fires. Obviously, big stuff, and they're doing it without fluoride, which is a big worry. This is a regulatory push. I think so far Australia has banned this sort of fluoride-based suppression, which was, I think a lot of lithium fire suppression was based on, and we're going to see the same sort of legislation rolled out in Europe and the US. So puts FireSafe in a very good position with the technology.
Okay, so
FireSafe, not FireSafe, LifeSafe.
Yeah,
I'm getting confused with Fire Angel, which we better not talk about them because their numbers were shocking.
Well, I like the Supreme. We talk about vapes and stuff. That, I mean, it is. I said that line there was put in there, support level around about 92 pence. It's bounced off that nicely up to 109 today, so that's nice. And
yeah, big with an upgrade basically.
Yeah, and Paul has chatted to the main guy there.
Yeah,
Sandy Chada.
Yeah,
checking out on the front page there.
Doing what they can to head, any sort of legislative worries off at the pass. In particular, underage vaping and the sort of recyclability of these products.
Yeah. What have you been looking at anything in particular, John? There's a Bushveld here. Bushveld is not falling for once, but if you look at the numbers here, they're a little bit worrying. So revenue of 78 million. Okay, adjusted EBITDA profit of 10 million. Operating profit 2.1, net loss of 12.5, free cash outflow 2.7, cash equivalent 3%, net debt of 90 million. So that's a little bit concerning. 90 million debt on a company that's 22 million market cap. So yeah, they expanded, when they could, and I think, and now they've got a bit of a, an issue with debt.
I mean, again, we talked about them the other day. Third bit of good news in a row, Journeo.
Yeah,
half-year results out today. I mean,
yeah. Wow. Well, I just run the spreadsheets through those, and they are looking good. I mean, especially look at that. Like I said, what's annoying is I was watching this company here, and they broke out. And I thought, oh no, they break out. They just broke up again. Look at that. It's broken again from this box. Pretty much, you can see a resistance there. Price broke up, and now it's at 236. And this is a good growing company, and it's like I said, they do hardware and software. Was it for traffic and
all sorts? Public transportation infrastructure.
There we are. You phrased it better than I could ever.
Yeah, they come in it from all sorts of angles. They provide the kit. They got the software. They got cloud-based interfaces with this and sort of data management in the background. They're acquiring well, and managed to raise money, if you remember, at a premium.
Yeah.
You know, this everything's going right here, which makes me slightly nervous. But yeah, I can't see, you know, anything other than good growth here. Shares aren't cheap if you're looking at on a forward basis. Well, actually, they are cheap. I mean,
saying that though, I mean, they're not quite. They're still acquiring, so I suppose their margins haven't fully matured yet. So you know, that's to come, I suppose. But yeah, group revenue 146%. But look at that, even cash and equivalents at the end of the period increased to 11.3.
Well, remember some of that was through the fundraising. You would have thought, but there's sort of upfront payments from customers as well. So, you know, the cash flow profile looks really nice. Yeah, it was, as I said the other day, what's not to like? Journeo is definitely a really good company that's, you know, it's well funded, it's growing, its profits are growing, more importantly, and the shares still look very relatively, you know, conservatively valued.
Yeah, so there's, I mean, this is the cash flow statement there. They you know, look at that. It's gone from last year 600,000, 2.4 million from operations. Their cash. They did raise 6.8 from the issue of shares there, but nevertheless, you know, it's a good growing company. It's
and you know, and really,
well.
I mean, it's acquired recently in Scandinavia, but yeah, really, it's all just focused on the UK at the moment. So,
yeah,
you know, then you can only imagine that there are massive opportunities in public transportation infrastructure in many other countries. You know, obviously this week has been dominated by news of the fiasco that is HS2. But you know,
apparently in China they have a university course that studies British failed public infrastructure projects.
I'm not blinking surprised.
So it is ballooning out of, you know, I mean, the cost is ballooning, but you got the stage to a certain extent where you just going to say, let's get it done and finished, because there's so much uncertainty about investing. When you start changing the goalposts, businesses just stop investing, you know, and same with EVs. When you just start changing, businesses then, you know, you look at internal investment from other countries, just to stop. We don't know what the British policy is. Are they pro EV or they, you know, they have no idea. It's chopping and changing all the time.
Yeah, I mean, I do think it's slightly unfair to, you know, characterise all British infrastructure projects as disastrous. Crossrail was it's very well managed. It's a very difficult project, and it actually is transformational in terms of.
It's a cracking engine. Do you see the program on that on BBC? The documentary on it, phenomenal. The size of those drills going through the walls, and just the precision of bringing in sort of pre-made platforms through and put them in through little holes and shutting down sort of tube entrances and putting all these massive concrete structures through there. That was phenomenal. It's worth catching up on that.
Yeah,
I think it's called Big Projects. But what else was there? There's something else. Oh yeah, U Group. I tell you, it's been a classic, you know, performer. Again, they upgraded again results for 6 months, and look at these. Even though it's a supply, some margins are a little bit thin, but the growth top line is amazing. It drops through, you know, And if you look at the chart on this, well, we got an alert on XPF there. What's happening there? Oh, it's rising. There we are. But anyway, so U Group. Where is it? Oh, there we are. Look at the chart on this. This is you know, I remember interviewing Bobby Leclerc on the podcast, and he was getting really frustrated with the share price and the market reaction to his results. And he was really getting annoyed. And that was around about this level when it was like 192 a share. Now, 998. So he's quite happy, I assume. But yeah, look at that. Powering away that, isn't it?
It's a great little subset to this.
Yeah,
energy efficiency, energy's, you know, energy supply. I mean, you've talked about good energy. I've talked about inspired. You know, there's so many companies.
eEnergy's in the same space as well. Yeah,
same sort of space. You know, you've got Enerac that's doing a bit around energy efficiency. You've got, you know, Kinovo that's doing on a sort of you know, more sort of public sector level. Funny enough, got a letter through from my council offering me solar panels today.
Did you?
Yes.
What, for how much?
I don't know. They haven't given me a price yet.
Is it?
But they are going to be selecting a preferred supplier and then offering solar panels across the region.
That's interesting.
Yes, I thought so. And as I say, you've got, you know, companies like Kinovo, who's mentioned before, you know, are the likely, you know, or a likely beneficiary of this. But I think there's a lot of companies who are on the market that will potentially be delivering this sort of technology to households. Lots going on there. Energy efficiency.
It's energy. It's hugely growing, isn't it? I think the ideal for anyone, or for me anyway, literally, is to have solar panels on the roof, a heat pump so it's consuming less electricity, and then it half charge my EV car. If I get any excess, I can sell it back to the grid. That's perfect, isn't it? And now you can, you can do that. It was almost a pipe dream many years ago, but now you have to rely on, sort of, as I say, Putin's gas.
Well,
don't rely on Putin's gas.
Funny enough, we were talking yesterday about Invinity and the big new deal that they've got via the Department of Energy in the US, sort of energy cooperatives, sort of like smaller energy companies. I think they supply sort of roughly about a tenth of US households, these things, about 32 million people. And, I kind of think, well, this makes sense. We've sort of found ourselves beholden. We tried to distribute the energy market, made a complete hash of that. I'm sure they'll be studying it in Chinese universities as we speak. And now we're sort of back to the situation where we've got, almost an oligopoly of supply. I don't understand why we don't distribute power generation.
Well, do you know what? Honestly, that's why partly if I keep mentioning the shares I own, people say you're ramping stocks, but I'm not. But in fact, Good Energy, for example, if you look at it, it's a very, I think, inspiring story. They have two power purchasing agreements, one with Ørsted, which is the offshore wind farm. But also, they have the biggest amount of feed-in tariff, also energy suppliers, independents, 1,800 of them. And there's stories. Just go to the website. There's stories of these people who set their own little power things. Like I said, one couple that comes to mind is a couple in Wales, hydropower. They live in the country, and they buy off them, and then they supply it to the customers. So it's completely renewable, 100% renewable. And it's a lovely thought. And they say about this decentralization of energy supply, that's the future. It will happen when everyone a lot of people have got solar panels on their roofs. You can almost create your own supply and your own power, and it's a lovely way of doing it rather than running these big companies.
Big companies, big projects, big nukes. There's one down the road from here that's in the works. Sizewell C. It's interminable. Huge, the arguments over it, and will this thing ever get built? Where's the money going to come from? And it's like it's sort of, everyone's been worried recently about Rishi's commitment to net zero, but the reality is the real change when it comes to this market will be from the ground up, not the top down, not big political proclamations.
Well, people talk about financial decentralization with blockchain and Bitcoin and all that stuff. Power decentralization, everyone creating their own power and take the power out of the big companies' hands. And that's the way forward. Someone said, can you look at Alan said Belluscura receives approval in Hong Kong. Hong Kong Fooey. I used to love that when I was a kid.
That was a good cartoon. Paul's written this up on the site. It's basically Hong Kong's equivalent of the FDA. Food and Drug Administration, big market, China for chronic obstructive pulmonary disease. They smoke a lot in China.
They love their fags, don't they?
They do love their
Chinese.
fags.
They still, you see, fag and then it'll stop. Unbelievable.
Yeah.
I remember once I was in Cardiff, right, and after a night out at the rugby, I think it was, and I went into the casino with a couple of friends, and as always, is a community of Chinese guys, and this is when you could smoke inside, and I asked if I could borrow a cigarette off one of the Chinese guys, and they banned me from the casino. That's the power they had. So they banned me. But yeah, they loved the old cigarettes there. But Belluscura, of course, it fell off on results, but in fact, that line's come back into play. Look at that line there, a higher low. It's come back into play there, so that's not a bad sign. It needs to get above that 200-day moving average, hopefully.
I mean, what Paul does suggest is, they're going to sort of temper this rollout. There's some big orders there, manufacturing partners in place. So I guess, and I think this is very, very important when a business is scaling up. Like, don't promise the earth and try and do everything at once. Do it in this sort of gradual, controlled manner. And I think, Belluscura are taking that on board, and that's what they're doing. Big market. Absolutely massive market, so definitely worth keeping an eye on.
Yeah, it's a very interesting year. The third biggest forward there is Anglo-Asian Mining, right? They're in Azerbaijan. Now, one of the problems with them is that their capacity has gone down because of an environmental inspection. So you'd think, and people are, in Azerbaijan, do they care? It just shows
yes, they do.
how difficult, even when you're operating. So they've had one of their is the agitator, I think, and agitation, leaching, and flotation process halted whilst an environmental inspection was carried out. And so, there's, whilst regrettable, was understandable. And so that's why they've taken a bit of a hit there. But like I said, it's everywhere. It's the concerns about the environment, and of course that plays into renewables as well.
Well, of course, because there might be this impression that it's somewhere else in the world, it doesn't matter. But the way environmental impacts are increasingly going to be measured is not just the impacts that you produce at home directly, but those that are produced throughout your supply chain. So there is nowhere in the world that would escape this environmental scrutiny. Nowhere. Consumers demand, environmental transparency, social transparency. It's not just made up rubbish. And as it goes throughout the supply chain.
I can't help this Lauren's piece here catch my eye. Just a bog roll flapping in the wind. What's that about, John?
Accrol.
Is that the ticker? Bog.
I don't know what ticker is.
Sorry, is it
ACRL? ACRL.
Yeah.
I mean, actually, this was it was an investor favourite, Accrol. For many years, but it's basically the UK's biggest manufacturer of toilet rolls. It does it for
fame, isn't it?
Yeah, it's a funny thing. It's something it's very large. So if you're making a pallet of toilet rolls, it's very, very large.
Yeah.
So there is still an incentive to make it in the markets that it's going to be used in. So Accrol is a big producer. Going back to what we were talking about yesterday about private label, does a lot of that. Fell out of favour, it's missed a few numbers, had a few problems.
Must have done well in the COVID lockdowns, though, because remember everyone was rushing to the supermarkets.
Rushing to the toilet.
Well, supermarkets first to buy toilet rolls.
Yes.
Thinking, I'm going to run a toilet roll. Since that date, I get now, we buy everything else from the supermarket, but now we get our toilet roll delivered in a big batch by Amazon. Just in case, and we always got a couple of loads in there. Yeah, listen, I say to sometimes you often used to run out, and I say, listen, we're never going to stop going to the toilet. It's something. It doesn't matter if you stockpile. They're in the attic and they're good insulation. It's fine. It sounds like a
Justin's house. You should be telling people that when the apocalypse comes, everyone will be knocking down your front door to raid your loft.
I know exactly. But so they've fallen out of favour after the dash for. But that the fact that it was this item during COVID that became the sort of the indicator of everything that was the world going mad and it's sort of a run on toilet paper is because it's really large and they don't have massive stores of it in supermarkets. Look at that. That was the dash for cash crash. It went from like 39 to 28, and then literally against most, apart from the COVID testing stocks, it went up, and most stocks went down at that time. And all of a sudden, since we found a vaccine, and we can realize we can all go to the supermarkets to buy sensible amounts of toilet roll, it's gone down. But
it needs to start generating some profits. Hopefully this year, the numbers look all right. The margins are on the up.
So what happens? Their profits being wiped out? Is it?
Hey!
There you go. Before we get some thing, HS2 one embarrassment. Toilet rolls is the new queen. Secret prepper. So anyway, so let's quick look at some of the bigger story. Have we missed out on any? Card Factory, done Quantum, PCB, eEnergy, Bowleven? Yeah, we've done all that. This is what I quite like now. But there's no mention of dividends, right? Water firms forced to pay back customers for poor performance. So they've been ordered to pay back 114 million customers through lower bills after missing key targets. But who looks at those lower bills? How do you know you're giving them
the
back?
regulator?
But the regulator hasn't done a good job recently. And I think they should stop dividends. If you're not performing, if you are polluting the rivers and causeways, whatever they are, you shouldn't be paying dividends. Why are you paying dividends if you're not doing your job? To sort out the leaks and the pollution first. Then when you get that sussed, start paying dividends. Yeah. And I just think,
Why are they rewarding shareholders when they're polluting?
I mean, there's been a lot of pressure there, so I think we might see some significant changes to that industry. The regulatory pressure will just keep mounting. You got to start somewhere.
It's an interesting stat. Sick days at work hit highest level for 10 years, right? And this is since the pandemic, pretty much. And they're saying, I thought what's changed then? And there's COVID and all that stuff. But they're saying working from home could also present an issue for staff that lived alone who had limited impact. I can see that. Because sometimes, me and you get to chat to each other. Some people don't get to chat to anyone.
I know.
It's at home, depressing, isn't it?
It's very, very hard. It's very, very hard.
It is hard.
When you're sort of, you don't have a separation from work and play. It's these things are very, very difficult. It's a complete change from everything we were ever used to. Social interaction.
Yeah, we are a social animal. I mean, I'm not very sociable, but I mean, generally, as a creature, we are social animals. We need so if you are living, I see why you get stressed and things. I think we should have a push to get back to the office at least 3 days a week. There's a survey about that actually. 3 days is ideal for people to get back to. If you haven't got an office, it's the problem, but of course.
Well, there are a lot of people who are calling for a return to the office. Certainly, companies in the city were leading that charge, but obviously it's had a massive impact on various economies as well. In sort of major working environments, working centres. London's a little bit better than it was, but my goodness, it took a while for that to recover.
Yeah. So there's a backlash against people saying you need to get back to the office, because when you're in the office, you do socialise with more senior people. You gain more experience like that. You're spending more time with them rather than just on a half-hour or 1 hour, calls online. It's true. I mean, if you are newly employed or at a university or whatever college, then you do mix with senior people and you get you hear conversations, you chat to people. Yeah. And so it does help, doesn't it? But there was a backlash against people trying to get people back to the office, wasn't there? Like there was some kind of conspiracy,
Well, indeed. I mean, things, there are questions about, there was the idea that because you're not traveling, you're doing work at home. So then what do you do? 10-hour days? And, there is an argument that, lots of the ideas that make businesses work come from just serendipity, from chance, from a conversation in a corridor, or as you say, overhearing something, and that disappears. And it's why the sort of tech sector went gangbusters during COVID, and I think everyone got very excited that this was going to be a permanent change of life. And I do think hybrid is here to stay, but I also think that more and more people will start going back to the office. This is untenable, but I still think there is a hangover to be addressed from working from home, which goes back to what we were talking about, on the sort of mental health front. And this is good news for companies like Kooth. If people are not able to work because they're stressed, then companies like Kooth, the NHS needs to address that, but they're only going to be able to address it through technology like that.
I'm keeping an eye on Kooth because, like I said, I did invest in them here. They rallied strongly, and then I sort of got out because I thought they're getting a bit too expensive. And then they rose money at a premium, and they jumped up even higher. They're starting to come off a little after, obviously, their financial results. Not bad, but they're trading their valuation because they're still developing and they're still. But I think it's one worth watching, Kooth. By the way, finally, John, we could become big in Japan.
Who? Look
at this. Me and you are on the podcast. Spotify is testing AI-powered feature to translate podcasts in different languages. And they're saying that, I don't know if you saw them. It's worth watching the documentary on Spotify, I think, on Netflix. But the main guy, Dan Exel, I can't think of his name, but he said it will sound like your voice. It will not only be a different language, but it'll be almost your voice. I thought, that is genius. So, John, you and I are releasing our podcast on Spotify, this one later on today, and we could get big in Japan. That's happened to a lot of British bands. The rest of the world didn't appreciate them at all, but they went big in Japan for some reason, and they tore out there. But that's phenomenal, isn't it? It's powered by Microsoft's OpenAI's, But that is good, isn't it? You can imagine hearing your voice, John, speaking fluent Japanese.
Imagine I don't already speak fluent Japanese.
Yeah, you probably do, actually.
I don't.
I think that's good. Anyway, thank you, everyone. what on earth is, Sean says, what is wrong with Audioboom? I don't hold, but I've kept an eye on them. They've done nothing but fall despite the directed buys as well. Well, essentially, they've got very low margins. Their advertising model, advertising take the hit as it always does in thing, but their margins are very low. And I do liken it to owning a Premiership football side. To get winners, you have to buy players in or buy talent in. It's very hard to grow organically, building up a podcast from nothing to millions of. You have to buy that talent. They come with a high cost, and that's why the margin's quite low. And then, on one hand, you're paying out for that talent. On the other side, you're not getting the advertising revenue because we're in a downturn. So that's why. But,
they lost a big show, didn't they? To Amazon. I can't remember what it was called. Yeah, hits-driven industry. So, as you say, they've got to pay up. They've got to pay up for the content. Makes it very, very tough.
Yeah. And finally, Gregory says, population growth equals more toilet paper unsold. There we are. He's a buyer. He's a wiper.
Just go and get it from Justin's loft.
I should mention that. He mentioned that though, being the target of. Cheers, everyone. Thanks for that. Speak tomorrow. Don't forget to like and subscribe button. Subscribe, like, share. Thanks very much. Cheers. Bye.